the ETF changed a whole bunch of things in the way that these people looked at it.
And I think a lot of people don't truly understand how monumental the Bitcoin ETF impact will be.
These guys will not enter buying half a Bitcoin. The minimum any of those will put in is 100,000, and a couple of them will put a couple million in.
As always, I am your host, Patrick Lowry, and today my esteemed guest on the show is none other than Bob Burnett. Bob, if you would be so kind as to tell us a little bit about yourself, a little bit about your background, and what it is that you guys do at Barefoot Mining.
Great. Yeah, thank you for having me, Patrick.
It's wonderful to have you here.
First about me, I'm one of the older members, I would say, of the Bitcoin community. In fact, my moniker on Twitter is Boomer BTC. So
Is it really? I was about to say we call those Bitcoin boomers, don't we?
Yes. So there are some of us, and for the younger members of the audience, some of us do get it, and some of us are trying to claw and pull the rest of the group with us, and finding more success with that. I mean, it's a very different space than it was maybe 5, 6, 7 years ago, where maybe it was a young man's game. But just as Bitcoin's become more institutionalized, you're starting to get the gray hairs in there. I mean, hell, even since my time in Bitcoin, my hair started to get a little bit gray. And I always joke that's either 6, 7 years of Bitcoin or 6 or 7 years of marriage. I'm not sure which one did it more. Well, yeah, either can have the same effect. But that is very true. And I live in South Florida too, and so the demographics obviously tend toward older. I turned 60 in a couple months, but I'm toward the very younger end of the spectrum, honestly, in my neighborhood. I've been trying to orange pill people here for 5 years, 6 years since I've lived here permanently, and it's been a struggle. But I have to say, the last, especially 60 days, things changed a lot. The ETF changed a whole bunch of things in the way that these people looked at it. And what's funny about these people is that they can radically change their position overnight, and you can see an individual pour hundreds of thousands or even a couple $1 million in very quickly, right? They can go from having no Bitcoin to owning 10 or 20 Bitcoin very, very quickly. And now they're all
it's incredible. And I think a lot of people don't truly understand how monumental the Bitcoin ETF impact will be. I mean, one of my companies I founded many years ago, Deutsche Digital, it's had ETPs physically backed by Bitcoin in Europe for a long time. But at the end of the day, it's only a European capital markets product. It's not the American flagship ETF product. And while, I mean, I don't know, I don't want to completely flaunt America. The reality is that the capital pools and the risk tolerance for the typical American investor is just infinitely bigger than what you see in Europe, what you see in Canada, where 3iQ and others have the ETFs listed. And I mean, it's wonderful that we finally now have that ETF, and you can have individuals and institutions now get that pseudo direct access to Bitcoin. But people don't understand how monumental this impact is, because now that we have that Bitcoin ETF, a registered security, it's not just that singular ETF that is now investable. You have Morgan Stanley, for instance, you have Goldman, for instance, that are applying to update their more broad spectrum ETFs to now deploy to the Bitcoin ETF. We still have billions upon billions of dollars coming into the market, and people just aren't seeing that quite yet.
Yeah, you're absolutely right. The second and third order effects of it, we haven't even felt the first order effect yet, frankly. I mean, much less the second and the third order effects of it.
I mean, until we finally stop seeing the grayscale liquidations, we are not really through that first order effect. This is just kind of we're basically in a foreplay stage with what the ETF can do right now, I think. We're about to really see the shebang over the course of the next year.
Yeah. Well, just if you take my community, I live in a golf course community here in South Florida. It's in Naples, Florida area. I think it's the 8th most high net worth zip code in
I'm very
America.
Jealous of that. I need to live in a golf community.
And
what's your handicap?
My handicap is my index is 9.
Oh, wonderful. I'm about a 12 index right now, but I haven't been playing too much lately.
Yeah. We're similar. We're very similar. Yeah. On any given day, that's close enough, right?
But what's interesting is, like, for instance, we have 300 members in the golf club. Mm-hmm. And I've gotten to know a great deal of them over the last 5 years that I've been here. There are probably 4 to 6 that have Bitcoin ownership right now. A couple have just come in, but there will probably be, based on my conversations, 15 to 20 that enter in 2024, all through the ETF. And for,
which is astounding.
And these guys will not enter buying half a Bitcoin. They will enter buying, or the equivalent, right? They will. I'd say the minimum any of those will put in is 100,000, and a couple of them will put a couple million. Like that. That will be, and that's just one little community. Mm-hmm. And if they start having success, that will ripple through, and we may have 20 or 30% of the community invested, and then some of them won't get it directly. They'll get it on the second and third order effects, like you talked about, where because maybe a different ETF or a different fund, or somebody owns MicroStrategy, or like those sort of things will ripple in, right? And like I said, what's different is most people that have been in the Bitcoin community, they have clawed and scratched their way, with, and I don't mean this in a bad way. I mad respect for it. $200 a paycheck, DCAing, right, or something like that, and they claw their way to 1 Bitcoin or 2 Bitcoin.
Right.
These boomers, as they come in, they leapfrog that whole thing. Like they just.
Oh, absolutely. They just have more purchasing power at the end of the day. These are individuals that have been saving up for their entire lives. They're largely retired at this point. They're just maybe looking to allocate anywhere between, let's call it 1 to 5%, probably maximum, of their net worth into this asset. And they now have a means through which they're familiar with. They now have a user journey, a user experience through the ETF that is very it's very familiar to them, compared to going on a Coinbase and just buying Bitcoin there. And I think people don't comprehend how impactful that update to that user journey for these types of investors are.
Yeah. Yeah, I'll give you an interesting little thing. In my community, there was a guy who had been an early adopter, and this is a little ledger right here, right? You
got to get off Ledger, don't you know that?
Oh, I know. Well, this was what he had. So this was a member of the community here, had a couple years ago purchased some Bitcoin, and he had self-custodied it. He had the ledger. He had gotten a metal stamp thing. And then he couldn't figure out how to get it. And he came to me and he said, Bob, here's my phrase, my 12 words. If you can get this off, I don't know how to get it off. If you can get it off, will you buy it from me? And then he wants to put the money into an ETF.
Right. So does he trust you that much to tell you the 12 words, or did he just not know enough to never give away the seed phrase?
Well, two things. One, he literally had viewed it as lost money, because he just was so helpless. He somebody had helped him get it on here, and then he didn't know what to do. And then but he did trust me, obviously. And so we've done the transaction. I've pulled everything off. These are all essentially worthless right now. But that was just outside of that comfort zone for him, but now he has a different way to get exposure, and for him, that's going to be better. And, I do believe in self-custody. I've got plenty of devices myself, and here's another one, but this community is going to adopt Bitcoin in a different way. And maybe some of them will trickle down into eventually self-custody, but probably not, honestly. Probably not. They're probably going to be very comfortable with the ETF and stay there.
And I think these are the people that view Bitcoin largely as either a speculative asset or as the digital gold, the moniker that we always kind of use.
Yeah.
I mean, I think digital gold as a moniker really sells Bitcoin short of what it truly is, and we can dive into that later. But for people that only need to view it as an asset and as a allocatable asset within their portfolio, the ETF is perfect for them. They might not be individuals like you and I that are willing to transact in Bitcoin for micropayments in the future whenever we start to see these procedures roll out. And at the end of the day, I don't think that we're ever going to be in a situation where these types of individuals ever even consider using Bitcoin in that fashion. For them, it's a portfolio asset. It's an investable speculative asset. And they're just going to ride the curtails of people like us actually using Bitcoin for what it was intended to be adopted for.
Yeah.
And there's nothing wrong with that.
Yeah. Yeah. We're not going to get 8 billion people all in with the same needs and philosophical approach. It's just not reality.
And that's one of the beautiful things is that Bitcoin is something different to everybody. So for me, it's the world's hardest and most sound form of money. For others, it's worthless. It's a way to launder money. And for others, it's just an investable asset. But I mean, maybe you could tell me a little bit about your journey into Bitcoin and what Bitcoin is for you.
Yeah. Well, I didn't really answer the first question you asked me, but so I'll kind of.
I guess we kind of went off on a tangent there, didn't we?
I'll kind of blend all that because it all kind of goes together. So as is obvious by now, I'm an older guy. I have a degree in computer engineering. I also have a minor degree in economics, but which plays part of my story. Mm-hmm. But I was fortunate in the mid '80s as I came out of school to work for a company called Zenith, which was one of the major TV brands. Mm-hmm.
I recall that.
But we also had a personal computer division. This was just after the IBM PC and IBM AT, which was really the launching point for the personal computer revolution. That product. I was very fortunate. My first real project out of school, very junior design member on what I believe to have been the first laptop computer ever created, and it was very, very exciting. Kind of led me down a journey over the next 20 years. That culminated with me at a company called Gateway, which in the 90s and early 2000s was, one of the premier and I'd say most exciting personal computer companies, where I became the chief technical officer, and I was also executive vice president of international. So I had kind of a dual.
Is Gateway around anymore? I mean, I remember when I was young, my parents had a Gateway PC. It was like the biggest thing for us back then. I even remember the days where you had the PC and you had the phone sounds in the background whenever you were trying to get on AOL.
Sure.
Fun times back then.
Yeah. Those were exciting days. And that piece of history that you were just referring to is a very important inflection point in history, because, I mean, that was... You were probably using AOL or something like that, and we were just kind of moving into the world of the internet, right? So the personal computer. A lot of people talk about the internet revolution. Now, clearly, I'm biased, but I would say, the internet revolution was really built on the back of the personal computer. Without the personal computer adoption, then there is no internet. There's no network effect. It needed hundreds of millions of personal computers out there connected into the world, often in 56K baud modems, but in those early days to make this whole thing happen.
I mean, the same as we had social media and internet companies in the early 2000s, but these social media companies would have never been anything if it weren't for the evolution of the smartphone. Yes. I mean, like that, those business models probably never would have been able to work on PCs and laptops. We really needed that hardware to enable it.
Yes, exactly. And I was very blessed to have been there from essentially the beginning of the personal computer revolution, through and kind of piggyback into the, what happened with the internet. And it was a wonderful experience, a wonderful ride for me. You had asked where Gateway ended up. The brand is still alive. It's owned by Acer.
Okay.
Personally, I think they make a mistake because they still promote the Acer brand and they just relegate the Gateway brand to kind of secondary So if you go to Walmart or Best Buy, you might find a couple discount laptops with the Gateway brand. Any of the Acer marketing people are out there, you're making a mistake, and you should reverse that.
We'll make sure to send this recording to info@acer.com or whatever the hell their contact is.
Yeah, because they wasted a brand that was at one point, and for those of you who are younger, in the late 90s, it was one of the 10 most recognizable brands in America. Like, not just personal computers, but our cow-spotted boxes were, just
I mean, so I
everywhere.
remember Gateway and Dell. Those were like the two brands, right? Like everyone either had a Gateway or what was it? Dude, you're getting a Dell. That stupid commercial thing that they had for a while.
Yeah.
Fun times back then. The 90s were wild.
Yeah. We were the fun group, the cowboys. Dell was the suits and they were not fun. They were all business, and that was the brand they promoted, and obviously to great success. But we were the renegades, the cowboys. It was a very fun period.
So how do you go from being someone that was a part of the team to effectively build the first laptop into Bitcoin? I mean, I have to assume this is somehow hardware related for you.
Yeah, it is. So I had left that world in 2004. So I'd spent about 20 years in the personal computer industry. I did a technology incubator and ran that for about 12 years. And then one day, it was 2017, I was at home. It was 9:00 at night. My phone rang. Unknown caller from Seattle. So I normally would never answer that. But I said to my wife, I showed her my phone, like, hey, I'm getting this weird phone call from Seattle.
I always ignore those. I've probably left so many opportunities on the table from not picking up random city phone numbers that I don't recognize.
Well, that's the funny thing is my wife, she's very instinctual, and sometimes when she says do something, I do it, right? There's a lot of reasons for that.
It's not like you have a choice, right?
Yeah. She said, answer the phone. And I why should I answer the phone? She said, answer it. She's insistent. Okay, I answered it. The other end, there's a guy, his name was Bill. He said, Bob, I won't say his last name. He said, Bob, this is Bill. I used to work for you at Gateway, and I got your number through a friend of a friend, and I'm hoping you'll give me 5 minutes.
When you said Seattle Bill, I think we know who exactly my mind went to there, but it wasn't that.
Oh, that's funny. I didn't even think of that. It was not that.
Seattle Bill. I'm like, does his last name happen to be Gates? But no, when you said he worked for you.
Yeah. So I did spend a lot of time with him. I did get to know him a little bit. Gates.
Very cool.
But we were at one time, little side note, Gateway was Microsoft's biggest customer through the 90s. The single largest
customer. Oh, was it really?
Microsoft.
Oh, wow.
And so I spent, I'm not saying we're buddies or anything, but I spent a fair amount of time with Gates and Ballmer and that whole crew because we were buying, probably at one time, we were probably in the range of approaching $1 billion a year that we were purchasing from them.
Holy hell.
Operating systems. And so, but that wasn't this bill. This bill said, hey, Bob, he was part of a group that had raised a bunch of money, and they were putting up Ethereum mining centers. Mm-hmm. And they could not get professionally designed equipment, and they couldn't get the NVIDIA chips that they wanted. So he called me up and said,
about what year was this, if you mind me asking?
2017.
2017, okay.
Yeah. So he said, and at this point, I had very limited exposure to anything in the crypto space, right? Mm-hmm. So he called me up and said, hey, can you design these? Now, I was wearing my computer guy hat, and I do want to say I am a Bitcoin maximalist now. My story starts with Ethereum, but it ends differently. But
mine's very similar, I would say.
Yeah, and he said, can you design these servers for me, and can you get the chips? Well, Gateway was customer number one of NVIDIA, by the way.
Oh, wow.
Back when they were a startup, we were customer number one. So Keith Thomas, who's the president of Barefoot Mining company I run now, and I'm the CEO and founder, and Keith's the president. Keith was the head of desktop engineering at Gateway when I was a CTO. So we happen to know some pretty senior people at NVIDIA. And make a long story short, this guy wanted to buy like 800 Ethereum servers, which were, I don't know, they were like $6,800 each. I think we ended up quoting him that. We got the deal. And, started a company with like a $6 million PO to get, we just created a company based off of this one phone call to design these. The NVIDIA folks remembered us. Those chips were very hard to get, but they trusted us that we wouldn't gray market them and we'd put them to proper use. And maybe they owed us a favor, or at least felt some kinship with us and wanted to help us.
I mean, if you were one of their very first clients, I'm sure there was some sentimentality there from the decade prior.
Right. So so that got us in the business. And so we fulfilled this order and designed a product very quickly, got it in the market. It was in the Ethereum space. A lot of people were making these home rigs, right? And they were real kludgy. And if you were trying to do anything at scale, there was just like no way they were going to work. They were going to fail left and right. So we were able to professionally design what's essentially a server with a bunch of graphics cards in it and get it off. So we started going to other people with the same design saying, hey, would you like to buy some? And nobody of that same size that wanted like 800, but much like the Gateway days, somebody would say, I want 2, I want 5, I want 10. Still nice orders, but almost everybody that wanted one said, I'll take them, but only if you will run them for me. So it forced us to essentially start hosting for people.
Yep.
So it was an innate,
the evolution of a lot of miners, like even the ones that set up their own rigs to mine their own, they end up doing hosting services for parties external eventually.
Yeah. So, but we kind of went maybe the opposite. We designed the systems, then we did the hosting.
Right.
Then we said, wow, these things really are making a lot of money. And we were doing pretty well selling the equipment. So we started pouring the profit back into our own equipment, which we were mining for ourselves then, which is our main business now. But then after doing that for a handful of months, and I started to kind of step back. I had first my technical hat on, and I started looking at Ethereum. Ethereum wasn't at proof of stake at that point, but it was already on the roadmap. There were several other things. I was looking at the technical complexity of Ethereum as a CTO of a Fortune 200 company. I looked at what they were trying to accomplish and said, this looks really difficult. And the odds of this thing coming together on time and on spec are really low. There's just too many interdependencies, too many things happening. And then I didn't like, you could see the centralization factors and the single points of failure and like those sort of things from a technical perspective. But I mentioned I had studied economics in school as well. I had found Austrian economics on my own in the early 2000s, so I'd been studying that. I found Bitcoin. I saw something that I couldn't poke a technical hole in that had all these Austrian principles, sound money principles.
Yep.
And so we started pivoting the company. And so we went through, about a year and a half of transitioning out of Ethereum and into Bitcoin. And
was that difficult at the time to do, not from a philosophical or a fundamental perspective, but from a hardware perspective? And now, I mean, back then, Ethereum, you could largely mine with GPUs, right? And for a while, you could do that with Bitcoin. Did a lot of the hardware that you were using to mine Ethereum with, did that become obsolete? Or was there a part of a strategy that you were able to leverage the systems that you had transitioning over to Bitcoin, or because you were so close with NVIDIA, or maybe other Bitcoin manufacturing groups at the time, it wasn't really too much of a strain on your overall business model.
Yeah, well, we only did so we did 2 generations of the design. Anybody that's a GPU geek, the first was on NVIDIA 1070 and 1080, and then the second generation was on the 3080. But essentially the same basic server design, just upgrading the GPUs. We unfortunately, I am working on a different group on an advisor on a project right now to design our own Bitcoin ASIC. By that I mean the chip. So I'm working on that separately right now. That wasn't possible at that time. So we did the next best thing, which was we approached Bitfury, which was so this is in like 2018, well into 2018. We approached them. We signed a deal with them to become the U.S. distributor, sole U.S. distributor and service center for Bitfury equipment. So, so that gave us, well, we weren't designing our own equipment. It gave us access on the Bitcoin side to the hardware we needed and manage this transition out of Ethereum and into Bitcoin. So now eventually Bitfury's kind of fallen aside. We still have some of their equipment deployed, but not a lot. They haven't kept up. So now we're using the same MicroBT and Bitmain equipment that most other people use. But I've been very open. Our intention is to still design our own equipment in the Bitcoin space. That's why partly why I'm involved with a group as a separate company designing our own Bitcoin ASIC. So we can.
How much of a monumental workload is that? I mean, at the end of the day, these ASICs hardware devices, there's only few people on earth that are able to either A, design, B, produce, and then C, actually deliver on these hardware facilities. I mean, how monumental of a task has that been for you guys? And what's like the timeline from conception through design, production to maybe being able to deliver these?
Well, our group is about 7 or 8 months into a 2-year process.
Okay.
And so, and yes, it's a monumental technical task. The team we've put together is fantastic. It's led by a guy named Bumsu Kim, who is the godfather of the solid state disk. So he was at Samsung, led the design teams that really brought the world's first true solid state disks to market. And we've got other members of our design team. For instance, one of the guys was on the Intel 486 design team. Another guy was at Broadcom. But you have to bring, I mean, and I'm fortunate to be part of that team, and said I was at Gateway. I'm kind of bringing more systems perspective. But yeah, you're right. There's, how many people in the world can really do this right? It would, maybe all your fingers and toes would get you to that number. So that there's like 20 guys.
I said there's only like half a dozen in Bitcoin right now that can deliver anything, right? So I mean, it's a huge task that you guys are undertaking. I mean, I'm going to watch that with much enthusiasm.
Yeah, and we're still raising money. I mean, because on top of all the technical pieces, and it's phased, right? You need, it takes a couple million to get started. It takes another 8 to 10 million to do a tape out. It takes another 30 million when you're trying to get into the first stages of production. And we still have to go through so there's a lot of failure points, right? You can fail beyond just the technical piece, which to us, that's the easy part. The hard part is, can we do that? You have to have the foundry relationships, which again, fortunately we have that in our team, as a small, essentially that's a different venture, but it's a small startup thing. We have those relationships with, and you have to have a relationship with either Samsung or TSMC. That's it, because there's really nobody else in the world right now that has the process technology to do what we need it to do. And then we have to fight companies like Tesla and Qualcomm and Broadcom and, all these kind of companies for space on the production line. So it's,
oh God.
Yeah, but we think we can do it. But those are the tasks, right? That's what you have to do to make it. So
I mean, that's absolutely fantastic and intriguing to hear. But coming back to Barefoot, my understanding is that there's, a slight nuance to your business model compared to the other typical Bitcoin miners like Core, Hut 8, the publicly traded ones that we would think of. Yeah. What is it at Barefoot that kind of distinguishes you and how you process and how you mine Bitcoin compared to these other groups?
Yeah, well, I think first of all, it comes from perspective. So we're a private company. We certainly are not on the same order of magnitude in terms of how much mining we have relative to those companies, but some of that's a little bit on purpose. I don't have an interest in being a public company. Partly at this point in my life, I don't want to be the CEO of a public company. That, I guess there's always enough money, right? But it would take
as a
lot.
CEO of a public company now, I enjoy it. I like having a bit of a public persona, but I could see in a couple of years where I'm just not going to want to deal with the investor relations, the shareholder relations. Half of your job is actually running and managing a company. And we at Samara, we don't produce anything. We're an investment group predominantly, right? We're a holding company. Yeah. So I look at deals, we look at investments, we try to stack as much Bitcoin as possible. But 80% of my job is communicating what we do to the public markets rather than actually doing the job that I need to do to actually run the damn company.
Yeah. But I would probably be more open if it was a company like the one that you have than trying to be the CEO of a mining company or a consumer electronics company or something like that, where, if I'm trying to deal with a large employee base on one side, investor expectations, there's just so many other things. And then there's all the regulatory requirements, of course, too, that are so onerous, even compared back to when I was in the C-suite of a Fortune 200 company. They've gotten a lot worse, right? My perspective, a lot worse. I think they've gotten.
So, I would agree with you on that point. I'm a former CPA at PwC, right? So we used to audit all the big Vanguard ETFs and all of these other platforms, right? And the regulatory environment around that has just gotten so much worse compared to when I was working in that 10, 12 years ago, whenever it was. In Europe, as a public company listed in Germany, we don't have anywhere near as stringent of compliance and regulatory issues like what you would have in North America. Yeah. But even then, it's burdensome. But hey, that's just the cost of being a public company anywhere. If you want the liquidity, you want the ability to grow share value outside of just on paper, well, you have a responsibility to the public.
Yep. And that's the trade-off. That's what I've given up is, access to capital and probably being bigger, for this independence. But see, part of it is I made a decision, again, as an older guy. I'm at a point in my life where what I do, the result of what I do is the single most important thing to me. And by result, I don't necessarily mean my profit this quarter. What I mean is, you said it earlier, I believe my mission with the rest of my life is to help create and enable Bitcoin for the next 1,000 years, to help it get through this inception point. It's what I think I'm good at. It's what I think I have the vision for. And I have to live within the ethos of Bitcoin personally, and I need my company to live within the ethos of Bitcoin. And it's very obvious to me that if I were a public mining company, I would eventually be forced into decisions where doing what's best for the ethos and the long-term vision of Bitcoin were at odds with what I was obligated to do as a public CEO, right?
You wouldn't be able to think about, you'd have to focus on extracting or enhancing shareholder value. That's your fiduciary duty as the CEO of a public company. Whereas if it's a private company, you can make certain decisions that are maybe more stakeholder oriented, more community oriented that, might diminish shareholder value, but is still a part of the mission that you have as that private company.
Yeah. And by the way, I also believe that by doing that, long-term shareholder value is still going to be better. That that at a 5-year point, at a 10-year point, that I'll be better off and everybody associated with my company will be better off. But this quarter or this year might not produce the same result.
And all you need is that one activist shareholder that's pissy at you for doing something that one quarter that, hey, you neglected your fiduciary duty of only working for shareholder value, and the whole thing comes down, right? It's very difficult to communicate that longer term vision.
Yep. And a great example, this is a bit of a tangent, but I published an article a couple of years ago in Bitcoin Magazine for anybody that's really interested, but it proposes something called the miner's trilemma. So the miner's trilemma is that if Patrick, you and I decided we wanted to do a venture together and put up a new mining site, really what we would have is we'd have three things that have to come together, three fundamental things. The first one is we're going to need access to the mining equipment, the servers themselves, at attractive prices. That's the first thing we need. The second thing we need is energy. Same thing. We need a consistent source of energy at a good price. Okay. And the third thing we need is capital. We need money. Now, my hypothesis is in the trilemma is that at any point in time, one of those three things is always hard. And
just because of macro factors or another?
And the macro factors are that a classic example in 2021, post the China mining ban, we had money flying in. Even as a private company, I was getting phone calls unsolicited. Can I please invest in something, right? Whatever it is, I'll invest in it. What was happening was energy was still relatively available, but the mining equipment itself very quickly was in short supply. It got grossly inflated, and a whole bunch of this, and the more capital that flew in, the worse it got, right? We got to play to points where that equipment was probably priced at 5x more than it should have been priced at. Now, what happened was, I'll come back to this. Now what happened? The bear market happens. What happens? The price of the equipment drops dramatically. It gets down to what I would say fair market value and instantly available. By the way, we're still in it today. If we decided we were going to do this venture, Patrick, I could get a small operation up for us in probably 6 weeks. Like I could get the equipment, I could get everything, like boom.
We should have another conversation about this after we're done this recording then.
Okay. But we also
so for the viewers that maybe aren't familiar with this, because they're probably going, why on earth are these hardware devices priced so differently based on macro environmental factors? And I think what a lot of people don't understand, unless they're in the mining industry or at least at a high level familiar with it, is that whenever you're valuing and you're pricing these assets, it's not the same way where it's like an iPhone hardware where Apple sets a price and you just buy it at the same price anywhere in the world based on it being a hardware thing and based on whatever costs and markup Apple put into it, right? For mining equipment, the standard is typically based on whatever discounted cash flow you expect that Bitcoin miner to produce over the next 2-3 years or however long the life cycle of that hardware is. And if Bitcoin's higher, the price, the DCF that you're going to get out of that mining rig is higher. Therefore, the value of the miner is higher. It's priced as such. And if Bitcoin is lower or expected to be lower in the future, if we're going to go through a bear cycle, then the price of the miner is lower. And a lot of people don't know that if they're not in the industry.
Yeah, that's exactly correct. And it's a spot market. It's not like in the gateway days where we would set our price for the next month or several months.
Right.
We can see pricing change in even less than 24-hour windows on a spot basis, right? So, the distributors and the manufacturers are responding in real time to market conditions, and there are you characterize the big factors. The other factors, by the way, are where is global hash rate and where is it going? Meaning, what percentage of the world's hash rate does the equipment you're buying represent? And the second piece is fees, which maybe we can talk about later if we have time. But what I want to point out, because I want to finish this thing about the public miners. So here's the problem. So I've even had this conversation with my team. We expanded a lot in 2023. And we did because while it was harder to raise money, we could get the energy and we could get the equipment at great prices. But it was hard to get the money because only real Bitcoiners understood that now was the time for investment, right? So it's in the bear cycle and maybe the very, very early part of a bull where you want to invest in mining. Once the bull
So I would agree with you entirely because, I mean, I'm very much a fan of acyclical investing. I believe that whenever you're in a bear market, that's where you should be deploying capital. That's where you need to be building, right? And that's why we actually invested more. I mean, we at Samara invested more over the last 12 months, I would say, than the company did in its entire history, just because we knew that this bull market that we're currently maybe getting into right now was going to be coming. And now everything gets overpriced. The valuations are just wild, even at this point in time.
Right. And so now the trick is it's emotional, right? It's emotional for the company. And it's emotional for the investors. So this gets back to that public company problem. So the public mining companies did not invest enough during the bear. Now, some of them were very constrained, but they really didn't invest a lot in 2023. They had invested a tremendous amount in late 2021 and early 2022. And like you mentioned, Core. I mean, Core is an absolute disaster. Like they're, I don't wish ill on anybody, and I don't wish ill on anybody that's invested in them, but what they did going public in early 2022 and then bringing on about $1 billion in debt in a very short time period. They were taking this easy access to capital, which was partly through the raise, through the IPO, and then they acquired a whole bunch of debt, and they threw it at this equipment that was overpriced without, by the way, even knowing they didn't even have the energy / facilities to put the stuff up. They, by the way, like I said, I'm not a fan because they were a big part of that equipment getting so overpriced, and they kind of ruined all the capital. Like the Austrian in me would say, well, hey, what they did is they ruined capital allocation and price discovery because of this easy money, right? It's the whole Cantillon effect thing, kind of infecting the Bitcoin mining industry.
I mean, they kind of, and this is, even one of the public miners were invested in Northern Data. They did something relatively similar. They didn't take on as much debt, thank God. But they acquired a whole bunch of ASICs, a whole bunch of hardware that they just weren't ever able to deploy, or at least they didn't deploy as timely as they were hoping to do, right? And that seems to be one of the biggest issues that a lot of these mining groups had. I mean, they just knew, whether they were right or they were wrong, they knew that they had to grow with reckless abandon as quickly as humanly possible, even if they weren't going to be able to deploy that growth, just because they needed to have a higher percentage of the global hash. I don't think that was the right strategy, and we can clearly see the results of that for a lot of these mining groups, like Core, that had to go through a bankruptcy proceeding. I mean, I'm glad to see that they got out of it, but still, the Cantillon effect that they had in the marketplace, it absolutely harmed just about everybody else. And I mean, I don't know. We'll see how that story plays out over the next few years. Maybe they've learned their lesson, or hell, maybe in this bull market, they're going to make the same mistakes again.
Right. And it's why I've talked to my team and I've said, hey, I started having this conversation with them a few months ago. And I said, the bull market is coming. And we as a group have to recognize that it's coming. We have to remember these lessons from, we were fortunate we didn't take on a lot of debt, but the bear market was hard for us. I mean, we're very proud of the fact we survived. I mean, just surviving was I think, an accomplishment.
I believe it. I mean, how many people went under?
Yeah.
Entirely.
Yeah. But what I had to say is there's going to be a day when the money gets easy and investors, we say, hey, we want to put up a new site here or a new site there, and the money starts coming too easily. That's probably a sign like we got to pull back and we're going to pause and wait for this thing to correct itself. We're still at that point, by the way, where the price of the mining equipment has not risen dramatically. I think we have the halving kind of looming, some concern about, so we probably have about a 6-month window here, would be my guess. Mm-hmm. We'll see. We have maybe another 6-month window where we can still, if we can deploy capital, rapidly get it in play, say in 6, 8, 10 weeks, get stuff up and running, well, then it still makes sense. But see, part of the problem with the public companies, and this, we talked about my philosophy. My philosophy is small things quickly. So we don't do mega sites. I call them elephants. So elephant site, 50 megawatts, 100 megawatts, several hundred megawatts. If you said, hey, Bob, you could do 100 megawatt site, or you could do, we'll just say 52 megawatt sites, I'll do 52 megawatt sites. So, well, isn't that operationally inefficient? Maybe. But here's the thing. First, I'm going to start getting 2 megawatt sites up way before you get any sites up. So I'm mining faster, number one. Number two, that 100 megawatt project is 12, 15, 18 months out. You don't know what conditions you're coming up in, right? But at least I know the conditions I'm starting in. So that's a big advantage. I can stop deploying capital if the conditions get unfavorable, right? I can, maybe I got 6 of those sites up and go, oh, wow, there was a big price correction in Bitcoin, or there was a spike in the cost or things like that. Do that. And then there's also
it allows for flexibility, right? And I think that's the main thing that you're targeting, because, so for instance, I remember it was actually pretty controversial a few years ago when Arush, the CEO over at Northern Data, he decided to sell the giant mega facility that him and the Winstone Group had built down in Texas a few years ago to, I think it was Riot blockchain, right?
Yeah,
everyone
Riot
thought that. Riot bought it. Everyone thought that was the stupidest decision. You had the biggest Bitcoin mining facility on earth, pretty much. Why on earth would you ever get rid of that? And Arush had the same philosophy as you did. Well, I would rather have 10 smaller facilities than that one mega facility.
Yes.
And I would rather have it geolocated throughout the world, because it actually allows me the flexibility I need to adapt to market conditions. He was panned at the time, but now ends out he was correct in his assessment.
Yeah, he absolutely is correct. It's the same philosophy Barefoot's built on, and and the other thing is, there's a different article. We won't probably have time today. I've written I read an article.
I got about another 10 or 15 minutes here. As long as you don't have a call or anything, you got to jump on. We can keep this rolling for some time.
So, I'll give you a very short version of this. So there's an article also in Bitcoin Magazine I wrote. It's on wild horses. So basically, I look at the mining landscape this way. You can divide kind of all mining sites into 3 sizes: rabbits, horses, and elephants. So an elephant is obvious, right? It's a 100 megawatt site, a 50 megawatt site, a gigawatt site. Big and powerful, but slow to develop, impossible to move. The rabbits are the plebs out there with an S19 in their garage. Okay. So they're out there doing their things. Individually, they have no power, although collectively they can be very powerful if there's enough of them, right? And the other thing about elephants is they're very easy to hunt. So if you're an enemy of Bitcoin and you want to attack them, whether that's regulatory, taxation, or I predict at some point we'll see things like eco-terrorism directed at the mining industry.
100%.
I don't want it.
We just saw it in Berlin yesterday at Tesla, right?
Oh, I wasn't even aware of that. I missed that.
Oh yeah, there was an eco-terrorist group. I don't know if they set off a bomb or they set fire to a transformer that supplies all of the energy to Tesla's Gigafactory in Berlin.
Yeah.
And they blew up the transformer, and it's estimated to cost Tesla like $1 billion because this German eco-terrorist group basically now has shut down the facility for, I think it's like a week or two until they're going to be back online.
Yeah. I mean, that's a short time period to get something like that back up. I mean, because,
I just never doubt Elon with what he wants to do anymore. I mean, it all sounds so stupid what he tries, but he's
powerful. Yeah. He may have had all the things in place, say, okay, we've got, a backup, I don't know how big it was, 50 megawatt transformer ready to go. Maybe. And he may have that, but that's not typical, right? And the bigger you get, the harder it is to solve that. So,
we're absolutely going to see that eventually in the Bitcoin mining industry. The ESG movement has already been targeting Bitcoin. Elizabeth Warren has already been targeting Bitcoin, A, around terrorism, B, around the production of energy. Yeah. I find these arguments on the energy consumption of Bitcoin to be highly wanting, but they're out there.
Well, yeah. So remind me to come back to that, because I have something I'm working on. I'd be happy to share with you and the audience to fight Elizabeth Warren. So
definitely.
I want to finish the rabbits and the horse. So we've got the elephants. They're big, powerful, but easy to hunt. We have the rabbits, individually not powerful. If we can get enough of them, they can be powerful. They're impossible to hunt because you can kill one, but if you shoot one, you will instantly force the others into hiding. You'll never find them, right? They're hard to find anyway.
Oh, yeah.
The horses are where I like to live. So horses are facilities from, it could be as small as 500 kilowatts, half a megawatt, up to single digit megawatts. Still very powerful, but we can put them up quickly. We always build them in a mobile fashion. So if either economic conditions change or we feel a threat, we can pick up and move and get out of there very quickly. Now, in addition to that, each of those three can either be captive or wild. Captive largely refers to being on grid, and wild largely refers to being off grid, but not completely. So captured also would include things like being a public company, managed by a public company. So if OFAC comes in and says, you must mine OFAC compliant blocks out of this facility, that's also part of being captured. Okay. But for this purposes, there's on-grid and off-grid. So, we do both. So you could have a captured horse. You could have a wild horse. You could have a captured elephant. It's almost impossible to have a wild elephant, though, because by definition, you just can't get enough energy to be an elephant and be wild. It just doesn't usually line up. So my belief is that that there's another article I wrote for Bitcoin Magazine. It's called Satoshi's Heel, and what it basically says is I think in a 1,000-year window. I've mentioned that before, and part of what I want to contribute is this philosophy and my system design background to say we have to design Bitcoin and build the ecosystem thinking about 1,000-year horizons. And so if something is, for instance, a 0.1% threat to us, 0.1% chance that something happens on an annual basis, like a transformer being blown up by eco-terrorism, you might say, well, it's really not that big a threat, and maybe I can buy insurance for it, something like that, right? But if you spread something out, a 0.1% chance over a 1,000-year window, it's essentially a certainty. So, and there are different threats, as we said, regulatory threats, eco-terrorism, environmental disasters, cyber attacks. There's all these different things, that are possible, and we have to we can build an infrastructure that provides that immunity. Well, Bitcoin gets very susceptible if what we move is to all captured elephants. As an ecosystem, this momentum toward massive sites controlled by public miners, centralized in maybe Texas and Georgia. And
I was going to say exactly that. I mean, basically, the elephants are just more highly centralized hashing power, right? I mean, that's all it is at the end of the day. Now, granted, that doesn't mean that Bitcoin is ever centralized, but you're having more centralized attack vectors that Bitcoin becomes exposed to through the elephants rather than the horses.
Correct.
And that's a very interesting analogy.
Yeah. So, so I think we're at that point where we're still safe. In other words, if all the elephants got attacked today, we would still have a highly secure network if they all got shut down tomorrow. But I've done the mathematics. It's in this article called Satoshi's Heel in Bitcoin Magazine for those that want the detail. But imagine a time, probably a few decades in the future. Maybe I'm here, maybe I'm not, right? But 99% of the hash power is with these captive elephants, and only 1% is left for the horses and the rabbits. Well, we're getting a little technical here, so I'll try to summarize it. But if a directed attack at the network, probably by a nation state, were to occur at the exact moment of a difficulty adjustment, which so Bitcoin is set up so that it looks at how much hash power is out there and tries to say, we're going to try to make it so that blocks are processed every 10 minutes. But it assumes the hash power that was there in the past will be there in the future. So if a directed attack were to occur right at the moment that difficulty adjustment occurred and they took 99% offline, what would happen is the block time would go from 10 minutes to 18 hours, and it only corrects itself every 2016 blocks. So it would take almost 4 years to get the block times back in order. And there's a whole article
years. To 10 minutes.
Which that is a way of attacking Bitcoin. Now, all the Bitcoin is still there. Everything still works, but it's a way of attacking the integrity and making it essentially unusable. So I'm sensitive to this. And one of the reasons I like coming on shows like yours is just to tell people about this. I don't want anybody to be afraid that we are not even close to this situation now. It is completely avoidable simply by having even 85% or as long as it's 85% or less elephants, we're okay. Trust me on the math. Much better at 70%.
Think that I would assume the lower the percentage of elephants, the better off we all are, because
yes, correct.
Frankly, more decentralized the security of the network is processing, right? So, correct. I mean, okay, how high of a risk is it then, would you estimate, and I don't even know if you've sat down and pondered this, but how high of a risk do you think it is that we have 85% elephants, 90% elephants mining the Bitcoin? Is that a future that you can foresee in 5, 10 to 15 years, just based on, frankly, the economics? This becomes sort of an oligarchic type industry. Yeah. Or do you think that it will still remain relatively distributed in where the hashing power comes from?
Well, I think it's a realistic possibility in the 10 to 20 year horizon. Mm-hmm. And the way that it happens is ironically through Bitcoin's prosperity. So if we do not have a big setback and the elephants acquire more power, they deploy the Cantillon effect to maximum advantage, new share issuances or they're able to get debt, they will go that route. And it's very hard for the horses and the rabbits to keep up. So,
I mean, it's just economies of scale at that point. Yeah.
Yeah. And what they do is they just go buy up all the supply because there's a finite amount of silicon available. So there's just none left for the little guys, right? So when the big guys go in and they go to Bitmain and they say, hey, I want to place an order for $400 million of equipment. And I go in and I say, I want to buy $800,000 of equipment for a project. What happens, right? I lose, right? So
every time,
but interestingly, like the system providers really loved me in 2023. Hopefully they remember that, because when those guys weren't buying anything, I was still buying, right? So, I hope they realize, and I hope more sources of silicon come out and more sources of systems come out that will help create some insulation. But if the big guys can buy all the supply, then because I think the little guys will always be able to get the energy.
Yep.
Because, like I said, I can go out and whether it's on grid or off grid, I can find these little pockets of energy at decent prices. And I think I'll always be able to do that. The question is, can I get the equipment and can I get the money? And at those timings. And when I say me, I mean the other horses in the world.
Right. And, I mean, it's interesting. And I mean, I remember just seeing an article. I forget if it was earlier this week or if it was last week. So, I mean, there's a nuclear power plant from close to my hometown. It's in Limerick, Pennsylvania. And I forget exactly which Bitcoin mining group that they're going to be partnering with. But they're going to seemingly take like a Bit River or a Bit Udo style mining facility at this nuclear power plant. I mean, I think that those pockets of energy will always exist for the little guys. You're probably right about this. But I mean, when I was actually at the Satoshi Roundtable a couple of weeks ago in Dubai, I had a conversation with another mining group, and their view, I think, was kind of similar to yours. They didn't express it the same way as elephants, but they felt that the biggest risk for maybe Bitcoin and Bitcoin mining as a whole was if Bitcoin mining becomes considered a commodity by nation states and it becomes nationalized to a certain extent, that it becomes considered core infrastructure, because you and I both know the benefits of what Bitcoin mining is for energy manufacture or energy production.
Yeah.
And that's what they felt could be something that happens over the next decade, that Bitcoin mining, maybe not in America, but largely throughout the world, becomes nationalized. I mean, what are your general thoughts on that? Is that a risk that's
Yes, it is a risk, but it's absolutely a risk. But I have a twist on it that's a little different than most other people in the industry. Mm-hmm. So I think most people understand this relationship between the energy sector and mining. It's real. I'm not, but I'm going to say something very contrary to that I'm somewhat of a lone wolf on. The commodity that you're referring to is not going to be Bitcoin. It's going to be block space. So,
pray tell.
Okay. So Bitcoin block space is finite. It's almost, you could think of it as absolutely scarce, just like Bitcoin itself. So if we have 10-minute blocks, which we have, and each block has 4 million weight units. For those of you who don't understand that, just think of that each block probably has a maximum average capacity of about 4,000 transactions. Okay. So if you do the math, what you'll find out is there's about 53,000 blocks per year, 4,000 transactions per block maximum. That means the capacity of the Bitcoin network is just over 200 million transactions per year. Now, that 200 million transactions has to be shared by all 8 billion people and all 330 million companies in the world. So,
I mean, this is why a lot of people say Bitcoin can never be used for microtransactions for exactly this reason. The block size is just not big enough.
Yeah, and it won't. They're absolutely right. I mean, that's why we have Lightning and Fedi, and we have these other layer 2 things. And I get in architectural arguments with people from altcoins or Bitcoin Cash or whatever when I want to humor myself. But it is the only way to create what we have, though, is the only way to create a secure base layer and have all these attributes of safety and security and immutability and all these other things come with that.
Yep.
So what happens, though, is that block space itself becomes the commodity. So here's an interesting realization I've had over the last year. You could say that today Bitcoin mining companies, they're hashers. By the way, the pools really control what's called the block template. The pools today decide what goes into a block. Now, I'm an investor and I'm on the board of directors of Ocean, which is a pool trying to change all that.
Okay.
Yeah. Longer discussion, but it's very, very important, in my opinion, that what we move block template creation from the pools. There are only 15 pools in the world. Six of them control 85% of the hash rate. and move the block template creation back to the miners. Okay, so I'm a major part of that initiative. Now, but at the end of the day, who gets to pick what 200 million transactions get picked? Because even as we sit here today, in the last year, block space has been completely full. Now, there hasn't been any urgency. So block space has two components. What's the demand for it, and what's the urgency related to the transactions? So we've seen fees spike, but prices have still been relatively cheap. Where I'm going with this, though, I started to say it, is the product of Bitcoin miners has been to produce Bitcoin to date. Okay. The subsidy part of the reward which is subsidy plus fees. I believe within 5 years, miner revenue will be more fees than subsidy.
When you refer to subsidy, you mean the block reward, effectively.
Well, the block reward is two things. The block reward is the subsidy, which is the issuance of new coin.
Yep.
And transaction fees.
Yes.
Okay. That, as measured in Bitcoin, that determines miner revenue.
So you think the transaction fees are going to surpass the subsidy in the near future?
Within 5 years, that's my prediction.
Yep.
So,
but
because by the way,
isn't that what we want to have happen? I mean, even
absolutely.
Satoshi. Yeah, even Satoshi said, like, this is, I mean, people always ask me, like, Pat, if the block reward is no longer there and transaction fees we want to keep low or else you can't transact on the Bitcoin network, I mean, what happens in 100 years when we mine the last block or whatever? And my answer is always, well, theoretically, the transaction fees should accumulate pronounced in Bitcoin so high, A, because of Bitcoin's performance, and B, because of the limit of block space, that it shouldn't matter, right? If you just play economic theory, I mean, it just works out that way.
Yeah. Well, I think the easy, you're exactly right. And I think the easy way to answer that is to use the math I gave you, which is, hey, there's only room for 200 million transactions a year. There's 8 billion people. There's 330 million companies. So it only takes a tiny fraction of adoption of those two groups to make it so that access to the base layer is extremely difficult and extremely expensive, right? I have zero concerns about it.
Well, do you have concerns that layer twos? So, I mean, one of the pitches that I've seen a couple of layer twos put out there is that they'll help limit transaction fees, et cetera, because they'll only aggregate, and they'll be able to bucket, let's call it 10,000 transactions in a singular block, right? Or 100,000 transactions in a singular block, and it'll only end up showing on the Bitcoin blockchain as a single transaction. Does that pose any risk to the amount of transaction fees that miners will then be receiving, and therefore that flippening of transaction fees to the subsidy will not actually occur? Or do you think that the throughput that might be enabled by layer twos is going to be so high anyway that it doesn't make a difference?
The way I would look at it is, if, again, we'll look at 8 billion people and 330 million companies. That's sharing 200 million transactions for a year. What would that be? 180,000. Is that about right? 180,000 per month.
Yep.
Okay. So, let's say your group decides to invest with Barefoot in a venture, just as a hypothetical. You're going to transfer 10 Bitcoin to us for the investment 2 years from now. You're going to do that as a base layer transaction.
Yeah, of course.
You know, we're not going to, neither you nor I want to trust Lightning with that. And, you know, what will that cost us? It may cost us 15, 20,000 sats.
I was going to say maximum it might be $15-$20. Not even.
Yeah, it might be a little more than that, but it doesn't matter. Yeah, I mean, we're kind of moving to a Bitcoin economy though too. So let's just say it's 10,000 sats or 15,000 sats. It's irrelevant. It's completely irrelevant as relative to that transaction. But times 200 million, it's a real number, right? I mean that that has to sustain the mining industry. So I look at it that way. I mean, yes, will people buy coffee and concert tickets and, pay a $10 Super Bowl bet on Lightning? Of course they will. But every time somebody buys a car, we already do a lot on base layer, as our company. Some of our client, we have a small hosting business. Most of it is self-mining now, but we have a small hosting business. We get a lot of our fees, our monthly fees from our hosting customers in Bitcoin. I have this a thing that I talk about sometimes where I say the subsidy. So the subsidy is the issuance of new Bitcoin, right? Mm-hmm. And it's been over the history of Bitcoin, it has been about 99% of miner revenue has come from the subsidy. And so a lot of people have then said, well, the subsidy has been for the miners. It's the miner subsidy. So the mining network could grow, and there's a truth to it, but it's a half truth. Because the other half of the truth is it was a subsidy for the users of Bitcoin, so that they could have access to the world's most secure digital network for free and on demand. We've had that for 15 years as users. Those days are over. I call it like the introductory period is over. Block space is full right now. Now, sometimes it's full of stuff like ordinals inscriptions that personally I don't think should be there, but I won't even go there. It's full. What isn't there yet is urgency. So the movement of money from a hot wallet or an exchange to cold storage, that's a Bitcoin movement, by the way, right? Every one of those. If you DCA with Swan or River, or I'm sure somebody in Europe does that. If you have a lot of European listeners that you're DCAing, well, when you move that,
I use River.
So they're a great company.
I love River.
So these companies, they want you to, both River and Swan, I applaud them for it, because they want you to do that.
Yep.
But that's a base layer transaction. Maybe it depends on the size of your DCA. Maybe you do it with every DCA, or maybe you let them aggregate and you do it once a month, or whatever. But all those are base layer resolutions or base layer transactions, and I don't see that stopping. So anyway, people are going to have to get used to the layer 2. But you had asked a question about nation state. Okay.
Yep.
Nation states are going to realize that their access to the world's most secure global network is dependent ultimately on their ability to be a block template creator. If you create block templates, if there are 200 million 200,000 transactions waiting to be processed right now, by the way, that's the current state, but only 4,000 of those can go on the next block. The organization that gets to choose those 4,000 is in a tremendously powerful position beyond the economics. They can, if you have 1% of the world's hash power, and it means you're going to create 1.5 blocks per day mathematically. So if you're, let's say, the country of Oman, okay, and you have 1% of the world's hash power, are you going to want to nationalize, or at least kind of impose some directive over that hash power that you own, so that you can make sure that the business of Oman is prioritized in this global network? Absolutely.
I mean, theoretically, yeah.
Yeah. So it's my prediction. I'm making some predictions today. It's also my prediction that a lot of people are predicting a merger of the energy sector and mining. And I believe you're going to see the financial sector come after mining harder and faster and beat a lot of the energy sector to the punch. Now, they may also buy part of the energy sector as part of that, but BlackRock Fidelity, like Fidelity's been in mining for a long time. I think they
started in 14 or 15.
Yeah.
Like Fidelity was way ahead of the curve on this. They knew like 10 years ago almost.
Yep. I have a really great relationship with the people at Swan. I like the people at River too, by the way, but I have a really close relationship with the people at Swan. Guess who now owns 1% of the world's hash rate? Swan.
Oh, wow. I didn't know that.
Swan owns 1%, actually a little over 1% of the world's hash rate. Why do you think that is?
Incredible.
Well, yeah. So, do not assume that I think the energy folks, and they're right, there is a phenomenal symbiotic relationship between energy and mining, but don't sleep on how precious of a commodity block space will be and how controlling access to that block space is going to have such a dramatic lure for the financial services companies.
I actually hadn't considered that. And I mean, my hypothesis is that Bitcoin, I mean, as we see layer 2 solutions built out, and we start to see some of these layer 2 solutions enable tokenization of assets in a more scalable way, secured by Bitcoin. It's not going to be maybe base layer, but it's going to be on that layer 1, layer 2, whatever we want to call it, if Bitcoin's the layer 0. My whole hypothesis is that the entirety of global capital markets can and maybe should run on Bitcoin. We don't need a CSD anymore in capital markets. You have Bitcoin. You already have a completely transparent, trustless environment. You're not going to need all of the nonsense, all of the counterparties in traditional capital markets like what we currently have, because it can all be tokenized and built on Bitcoin. And I hadn't considered that block space element, because if we're going to assume that all equities, debts, derivatives, whatever they may be, are going to be tokenized and trading on layer 2s on top of Bitcoin, institutions like the New York Stock Exchange, like the Deutsche Börse, like Goldman, for any new issuance of a securitized asset or IPOs even. I mean, God, could you imagine how horrible it will be if you're a book runner for an IPO, but you don't have enough block space to process the distribution of the initial capital, right? That's going to be, I hadn't considered how detrimental that will be. So yeah, you're going to have these groups buying up block space left and right, it seems.
Yeah. Well, here I'll add one other thing to it. I've been working on another project for a year, because I've had this vision of this coming for quite a while, and so I started working on a product with another company out of Tampa. Actually, we're just about to go into beta right now. But what we'll be bringing out is a block space derivative. So it's a forward on block space, so that if I'm a miner, we'll use the 1% because it happens to, the math is very easy. If I have 1% of the hash rate, and I can create my own block templates, which by the way is why I joined Ocean, and I invested in Ocean and joined the board, because the Ocean pool will be coming out very soon with, instead of Ocean picking the blocks, each individual miner can pick the block. And so
that's interesting.
Yeah. So it's a dramatic architectural thing that I think people are sleeping on. But what will happen is, if I own 1% of the world's hash rate and I create my own block templates, I'm going to pick 2 million of next year's transactions. If there's 200 million, right, transactions, and I have 1% of the hash rate and I create block templates, I can't tell you if it's going to be in the next block or not, but I can tell you mathematically in the space of the next year. So what I can then do is I could say, hey, let's say Smart Group wants to, that you're going to do a lot of base layer resolutions in June of 2024 for whatever reason, right? So you could come to our marketplace and you could say, hey, I want to buy a forward contract to lock in a price and lock in access in March for 100 base layer transactions in June. And I can give you that assurance that I can't tell you if it's going to be June 10th or not, but I can promise you you're going to get 100 in June.
Now that's interesting, because now you're basically selling a forward on settlements.
Correct.
And we don't even have a concept of that in traditional finance, really. We've never had to worry about something along those lines. But I know, for instance, I would love it. I mean, our banking partners in general are just very, very slow. Sometimes it takes them a week to process a transaction just because of backlog of transactions that they have in their normal banking activities. If I could have a forward where I could guarantee that any transaction is going to be T+1 that I do with that bank, I mean, I would buy that in a heartbeat.
Yeah, we're bringing that to Bitcoin. So we're actively bringing that to Bitcoin right now.
So that's astounding to hear. Okay, so before we jump off, one of the things that I mean, we've gone significantly over time, but I mean, this has been such a stimulating conversation. I've loved every second of it. But you had mentioned before that one of the things we're going to have to come back to is how do we stop Elizabeth Warren? Before we jump off here, I definitely want to hear your thoughts on that, because this evil, horrible witch, she needs to be stopped at all costs.
Yeah. Well, so one of the things, as an engineer, I've looked at is, what is an S19? So S19 being the most popular equipment used for Bitcoin mining to date, probably.
Yep.
Okay. And said, there's a couple things. First thing is, there's a tendency within the industry to call that an ASIC. I would encourage everybody listening to never call the system, the machine, the server, the rig, an ASIC. ASIC stands for application specific integrated circuit. It's a chip. But the first part of the word is application specific. Okay. I have another project. It's called Chaos. And what we are doing is going to prove to the world that an S19 and similar equipment is not Bitcoin mining equipment. It is an entropy engine. And entropy just meaning it has the ability to create randomness at a level that's never been seen in the world before. And so there are massive uses of entropy. From, if you're in the financial world, Monte Carlo analysis. If you're in online gaming, it's obvious, right? How do you deal a deck of cards? If you're in the pharmaceutical industry, you need randomness for modeling purposes. If you're in security, it's obviously massive because you have to generate passphrases and two-factor authentication sequences and all those sorts of things. You need randomness for that. Well, Chaos, which is a separate project that I have outside of Barefoot, what we have done, and we are now in beta. We're going to have our first website up before the end of the month. We will prove to the world that you can use S19s and similar equipment to do things completely unrelated to Bitcoin. And so we will prove. Now, what does that mean? That means that you can never have a regulatory attack or taxation attack on mining, what we call mining, because that's general purpose. It's general purpose equipment that you don't know what software is running on it at any point in time. And you don't know whether it's being directed to financial analysis or curing a disease or running a casino or mining Bitcoin.
Or the new thing is AI video rendering, and all the stuff with ChatGPT.
We'd have a hard time doing that, to be honest, that particular one, Patrick. But we may be able to contribute to it in one step removed. But see, I could mine. I'm doing this interview with you through a MacBook Pro. I can mine Bitcoin on that computer. It may not be profitable, but I can, and I have the right. So the only way to attack Bitcoin mining is to say the government must mandate and know what software everybody is running on every computer. Now, if you can get that legislation through, Elizabeth, go for it. But I don't think.
They're trying to get. They're trying to get through legislation to see every single goddamn financial transaction you ever participate in. That's right. Why they're. Yeah. I mean, now it's like what, $600 transactions you have to disclose, which is just absolutely absurd. I mean, that's inevitably going to be $1. They're going to push for that no matter what. It's just how corrupt politicians operate. So
yeah, and they use inflation as a weapon against that. It goes back to the Bank Secrecy Act, 1970, where, I mean, I've had this joke like, hey, at some point in my lifetime, taking my wife and I take our grandkids to Denny's for breakfast one morning, and I'm going to have to, if I pay in cash, I'm going to have to do a financial disclosure because it's going to be, over the limit. Like,
they're absolutely going to get that. I mean, this is why politicians have to be stopped at all costs. Now, that's actually interesting that you put it that way, because if the theoretical hashing power that you're putting out is no longer just applicable for Bitcoin, but it can be used for anything, or maybe not anything, but multiple other things, I mean, that might be impossible to regulate, because there might not, I'm not familiar with this. This is definitely more your world than mine, but I mean, is there even software out there that can track how every software element is actually being used for computational purposes? I highly doubt that.
Well, no, you can't do that.
Right. I mean, is that even theoretically possible?
You could, if you were an oppressive government, you could force a piece of software, or actually you'd go even into the firmware of that computer. Say, well, you can't even use a computer if it doesn't have this certain type of firmware. I mean, this is very dystopian, right? And so, we're gonna record and report every usage, and we'll whitelist and blacklist different applications. It's actually the real thing would be.
It doesn't sound too different than what they're already doing with our cell phones right now, anyway, right?
Yeah.
Yeah, unfortunate, but it's probably true.
Yeah, it is.
No, but that's a very interesting way to fight back against it. But Bob, this has been a eye-opening show. Thank you so much for coming on. I'm going to have to make sure that we invite you back at some time in the future. I'd love to learn a little bit more about Ocean and what you guys are doing over there. So we have to have another conversation about that again.
Sure, I would love to. Thank you for having me, Patrick.
All right. Thanks again, Bob. We'll see you around, guys.